Sometimes you stumble upon these stories you've never heard of, but they're just so fascinating. And that's exactly what we're diving into today. We're talking about Amtek Auto, an Indian company.
Okay.
They started out making brake pads, supplying to like huge names, Maruti, Tata Motors.
Yeah.
But it ends up in bankruptcy and accusations of this massive bank loan fraud. So it's quite a journey we're going to unpack.
It really is. And what's particularly interesting about Amtek Auto is how its story really plays out against like the backdrop of India's economic liberalization back in the 1990s.
Right.
Those policy shifts, I mean, they really had a huge effect on businesses all over the country. And Amtek's journey is kind of a powerful example of, both the opportunities and the potential downsides that came along with those big changes.
Okay, so let's break this down a little bit. So Amtek gets its start in the 90s when India is really starting to open up its economy, right?
Right.
And that creates this whole new landscape, much more competitive for businesses.
Much more competitive.
So did this liberalization directly help Amtek succeed in those early days?
Well, absolutely. Imagine, a market where suddenly there are all these new companies coming in, both from India and from other countries. So to do well in that kind of environment, companies had to be really quick to adapt, really innovative, and ready to jump on opportunities when they saw them.
Yeah.
And that's exactly what Amtek did under their founder, a guy named Arvind Dham.
So Dham, he sees this potential,
Mm-hmm.
and he just goes on this huge acquisition spree. He's buying up competitors both in India and overseas. Was that a common strategy at that time? Were other companies doing similar things?
Yeah, in a way it was. A lot of companies saw acquisitions as a fast way to, grab more market share and get ahead of the competition. But Dham, his ambitions were really exceptional, even compared to what other companies were doing. And that's where things start to get really interesting, I think.
Yeah, because these acquisitions weren't cheap, right? They were financed with bank loans, huge amounts of them. And we know that Amtek's debt just ballooned during this period, almost quadrupling to a massive 14,200 crores by 2015.
Yeah.
That's an enormous amount of money. Were there any warning signs?
It is. It's a huge amount, and it really makes you wonder about the risk management practices of both Amtek and the banks that were giving them these enormous loans. Were the banks really thinking about the risk involved? Were they considering the possibility that Amtek might not be able to pay back the money? These are questions that, they would regret not asking.
Because by 2015, those warning signs, they start flashing bright red, right?
Yes.
Amtek defaults on a significant bond payment, 800 crores.
Right.
You would think that would make the bank step in and do something right away.
You would think so, wouldn't you? But there's a problem. Declaring loans as what they call NPAs, non-performing assets, that has a lot of consequences for banks. It impacts their balance sheets, how much money they're making, and even their reputation. So they're often really hesitant to take that step. They're hoping things will turn around on their own.
So they kind of just crossed their fingers and hoped for the best.
Pretty much. And, while that might seem understandable in the short term, it can actually make things worse over time.
Right.
It's like ignoring a crack in the foundation of your house and hoping it'll magically fix itself. And in Amtek's case, that crack would just get bigger and bigger until
it couldn't be ignored anymore.
Exactly.
And that leads to the company's collapse and bankruptcy in 2017. And Amtek becomes part of what was called the Dirty Dozen.
Yes.
These were the first 12 big companies that fell under India's new, at the time, Insolvency and Bankruptcy Code, the IBC. But this is where the story takes a turn.
It does, yes.
Because despite Amtek being bankrupt, Arvind Dham, he seems to be doing just fine. He's living comfortably. He's even attracting bids from people who want to buy the company. It's almost like he just walked away from this whole mess.
And that's exactly what makes the next part of this story so shocking, because it turns out what looked like, just bad business decisions might actually be something much more deliberate and much more disturbing.
So give us a preview. What's the twist?
Well, in 2022, years after Amtek went bankrupt, someone comes forward, a whistleblower, and drops a bombshell allegation. Dham, they claim, was secretly moving funds out of Amtek Group companies and into this whole web of shell companies.
Shell companies.
Right.
Now, for those of us who aren't, high finance wizards, what exactly are shell companies and why would someone use them?
So imagine a shell company as this empty company. It exists on paper, but it doesn't really do anything. It's like a shell. And they often have these dummy directors, people whose names are listed as being in charge, but they have no real power or even knowledge of what the company's actually doing.
Okay.
And in this case, the whistleblower is saying these shell companies were used to shift money around, making it almost impossible to track where it was actually going.
Okay.
Like a financial magician making money disappear.
I like that.
And this revelation, I mean, it really shook up the Indian financial system. It led to investigations by agencies like the CBI and the ED, the Enforcement Directorate.
So what did those investigations find? What did they uncover?
Well, the investigation, it kind of peeled back these layers of like financial complexity.
Yeah.
They found this whole network of, get this, hundreds of shell companies.
Hundreds.
Hundreds. And some of these companies, they even had unsuspecting people listed as directors. Like imagine, you're just a regular employee at Amtek, and suddenly you find out you're supposedly the head of some company managing crores and crores of rupees.
Oh my gosh.
Yeah, it's wild, right? But the investigation didn't stop there. The ED, they dug even deeper and they uncovered all these assets connected to the Dham family. We're talking properties, shares, the whole 9 yards. It was all worth over 2,000 crores.
Wow.
Yeah. And this really highlights the huge difference between the Dham family's alleged personal wealth and the massive losses that the banks had to deal with. It really raised some serious questions about corporate governance and whether the system could be exploited.
Right. It's like a real-life financial thriller, but with huge real-world consequences.
Yeah.
And speaking of consequences, how did the auditors miss all of this? Weren't they supposed to be checking Amtek's finances?
That's the big question, isn't it? And this is where things get even more interesting. So back in 2018, there was this forensic audit. It was done by EY, a really big accounting firm, and they actually flagged some suspicious transactions. Their report pointed to hundreds of crores of rupees being funneled through what they call related party transactions.
Related party transactions. What are those?
So basically, these are transactions between companies that have close connections, like a parent company and its subsidiary, or companies that share the same directors. Now, these transactions, they're not necessarily illegal, but they can be used to hide things, to give unfair advantages, or even manipulate financial statements. And in Amtek's case, EY's report was saying, hey, we're not so sure about these transactions. They might not be on the up and up.
Okay, so they find this evidence of potential wrongdoing, but then nothing really happens for years. Why not?
It's a question a lot of people have asked. Despite what EY found, there wasn't a big investigation or anyone being held accountable. It wasn't until the whistleblower went to the Supreme Court that things finally started moving. Even the court was wondering why this wasn't looked into sooner, given what EY had found.
Right, right. And just when you think this couldn't get any more convoluted, we discover that there was another audit in 2020 that actually contradicted EY's findings. This second audit said there was no evidence of any fraudulent transactions. How do we make sense of these two completely different reports?
It's like a he said, she said situation, but with billions of rupees on the line. These conflicting reports might have given authorities a reason to wait before taking action. It's also possible that, because Amtek was already in insolvency proceedings, the banks were just focused on trying to get their money back. And a full-blown investigation might have made that even harder.
So they maybe chose to try and salvage what they could instead of getting to the bottom of what happened?
It's possible, and it highlights this difficult choice, right? Do you prioritize a quick resolution, or do you go for a thorough investigation to find out the truth, even if it means it takes longer to recover the money? In Amtek's case, it seems like going for that quick resolution ended up costing a lot.
So how much were the banks actually able to recover in the end?
A hedge fund from the U.S. ended up buying Amtek for a few hundred crores. But that's nothing compared to the over 20,000 crores that they were owed. The banks took a massive hit. They lost a big chunk of their investment. And it's a stark reminder that if you're not careful with your lending practices and you prioritize speed over thoroughness, you can end up paying a hefty price.
Yeah, the Amtek Auto story is definitely a cautionary tale. But it's more than just the failure of one company. What are the bigger lessons here? Why should our listener care about this, even if they aren't involved in the auto industry or Indian finance?
What makes this case so interesting is that it goes beyond just the auto industry. It exposes these weaknesses that exist in any financial system. This story raises questions about how effective regulations really are, the role of auditors, and the importance of good corporate governance in stopping fraud.
So what can we learn from this whole debacle? How can we stop this from happening again?
Yeah, it feels like one thing just leads to another, and before you know it, you've got this huge mess on your hands. Exactly, and that's why you need strong regulations. They're like these guardrails to keep things from getting out of control. But rules by themselves, they aren't enough. You need people who are willing to speak up when they see something wrong.
That's where those whistleblowers are so important. They're
Absolutely.
the ones who expose all these shady dealings, and often they put themselves at risk to do it. It takes a lot of guts.
It does, and the Amtek case, it really shows you just how much courage it takes to stand up and tell the truth, especially when you're going up against powerful people. And the impact it can have, it's huge. I mean, without that whistleblower, who knows? Maybe we'd still be in the dark about this whole fraud.
Right. It's a good reminder that we all have a responsibility to speak up when we see something that's not right, even if it's scary or we think it might backfire.
Couldn't agree more. It's all about creating a culture where people feel like they can call out bad behavior and, help make the business world a more ethical place.
So zooming out a little bit, what does all of this mean for our listener today? I mean, we're not all running these giant corporations. Why should we care about what happened with Amtek Auto?
That's a really good question. This particular case involves a big company, but the issues at the heart of it, they apply to businesses of all sizes, no matter what industry they're in. It really comes down to transparency, accountability, and doing business ethically. Those are the things that build trust, trust between businesses and investors, between companies and their customers, and even within the entire financial system.
Yeah. When that trust breaks down, it's like a ripple effect. The consequences go way beyond just the people directly involved.
Absolutely. The Amtech story, it's a warning sign. We need to be paying attention, asking tough questions, and demanding more from the companies we deal with, whether we're investors or just regular consumers.
We can't just assume everything's on the up and up.
No.
We have to realize that when greed goes unchecked and people aren't held accountable, the results can be devastating. And it affects way more than just the folks in the boardroom.
What's fascinating here is, this story started in India, but it has implications for everyone, everywhere. It shows us just how important it is to do your homework, to make ethical choices, and to have strong oversight in any business, no matter where you are.
Well, this deep dive has certainly given us all a lot to think about. How can we, as individuals and as a society, create a system that rewards good behavior, promotes transparency, and holds people accountable when they abuse their power?
That's the big challenge. And the big opportunity, it's going to take all of us working together, regulators, businesses, investors, and everyday people, to build a business world that's more ethical and more resilient.
Well said. Thank you for walking us through this case. It was complex, but definitely eye-opening.
My pleasure. Is a great discussion.
And to our listener, we hope this deep dive has given you some valuable insights and maybe sparked your curiosity to learn even more about these important issues. Until next time, stay informed and stay engaged.